Hey everybody, how's it going? That may be the first time I've ever let that countdown timer get all the way to the end. And before we get too much further, I just need somebody to put into the chat that you can hear me. Somebody say, okay, you can hear me. All right, great. Thank you for that. And Lana is, she's actually here in the office, but she is joining us also on, are you on Facebook or? She's watching on Facebook. So we are live streaming right now on Facebook and YouTube. So that's pretty cool. And we're learning how to do this. And Lana I just showed you the link and also she says, hello everybody, and hello to you, Lana. And we're so glad you're here. For those of you that don't know, Lana McSwain is the new, she basically runs Flipping America now. Between her and Diana, I actually have my life taken care of because they're running things, and I'm so grateful for all of that. And Nick is standing by. He's in the green room. He's about ready to join us, but let's go through the announcements, and I'll switch over here to this screen. And this is what we're talking about today. We're talking about counting your chickens. And Nick Baldo is with us, and I'm really excited about the topic. I'm looking forward to learning some stuff. And really, this is not my bailiwick. I understand it enough to know what to do and know that I want to hire somebody else to do it. But Nick is going to teach us a lot today, and he's got a remarkable opportunity. So stay tuned, and we'll get into that in just a moment. Tomorrow night, we're continuing the theme. I'm going to talk about why you need an accountant. You need to keep good records, but you also need an accountant in this business. And my own accountant, Will Tomasello, is going to join us. I've been trying to get him for almost 3 years to join us. Now, there are some great accountants out there and around Atlanta, but Will has been my guy for a long time. And he's been with me through the ups and the downs and the backups again. And he's just an amazing guy, for one thing, because he's also a real estate investor. Single family, commercial stuff. He does all kinds of things, and he always knows the answer to the questions that I have. And when you have someone like him, it's great when you have an idea that you can run it by the accountant first and see what the financial implications are, and then you need to run it by legal too, because some of the things I've thought of that sounded like great ideas to me are actually not allowed. But that happens, so it's good to have people. This is coming up next week. Next Wednesday at this time, I'm going to deliver a talk to you called Get Stuff Done. How do you manage multiple income streams? How do you have everything going on? How do I run 7 businesses and still continue to do fixing and flipping and wholesaling and all the things that we have going on? I'm going to tell you some secrets next week. It's a system that I've devised for myself. I don't have a real beautiful creative name for it, but we call it the Goals, Milestones, and Steps, or the GMS Planner System. I'm going to talk to you about that next week on this call, and how to set goals and to reach them using milestones and daily steps. Then next Thursday night, we've got Rod Cleef joining us, and he's going to talk to us about how to buy multifamily. Some of you have heard of Rod Cleef. He's one of the best-known multifamily apartment guys around the country. He's got opportunities to invest as well as training that you could do, and he always gives us something special when he joins us here on the show. So there's going to be some sort of a nice little benefit for you if you're there. If you're interested in multifamily, and I think that everyone ought to be interested in multifamily at some stage in their career. We are part of, this is the Flipping America RIA, which of course is part of Flipping America, the brand. It is a free app in the App Store. You can listen to my podcast, now 444 shows strong. And if you don't want to download the free app, you can listen to it on any podcast platform, including your favorite podcast platform. Just go look for Flipping America and listen. And we've got some resources for you. This is basically, take a screenshot here because I've got 2 screens of resources for you that we've been working on over the years to put together. If you want to find deals, then there's my little ebook that's in the Amazon store, Deals and Where to Find Them. That's a link to that if you type that in, or you can just go to Amazon and look for the book called Fantastic Deals and Where to Find Them, and you'll find it. It's just a little ebook, really. It's $3.99 Kindle or $9.99 for the paperback. And I tell you exactly what I did over the years to start getting 10,000 deals a week in my inbox. You heard me right. Okay, then if you are interested in doing some driving for dollars, there is an opportunity for you to sign up for Deal Machine using that link right there, Dollar Driving. And then if you want to get funding, of course, Bay Mountain Capital's here. Chip is on the call. He's going to talk to you a little bit more about that. But you can go to baymountaincapital.com. If you want gap and unsecured funding, there's another link for you there, bit.ly/FA funding. And then we've got, if you want to analyze deals, you can use flippingamericacomps.com. You go there, you can get a 7-day free trial. Set up your self-directed account with American IRA /Flipping America. Get insurance. If you need insurance on an investment property, National Real Estate Investors Group Insurance, NRIG. Anyway, I love them. They understand what it is we're trying to do. They work with us. They're very polite, very nice, great customer service. And that's where we insure all of our properties now. And deals from the MLS. It is possible to find deals on the MLS, and Privy is a master at finding those deals. And so if you're interested in that, you can use that link, Get Privy Program, and you can check it out for yourself. And we're going to have the people from Privy and also from PropStream here on the show in the upcoming weeks. And you'll see those links again. Okay, I want to encourage you to join the association. This is the Flipping America RIA. And look, we didn't charge you to be here. We've been going since January a year ago, January 2020, and we've never charged anybody to attend one of the meetings. But you know, there's a lot of work involved in bringing this to you, so we ask you for your support. Just go and join the association. You can do so for $10 a month. We've got other benefits and so forth. You could read the benefits when you look at that link. But I appeal to you today just based on a desire to show your support and appreciation for all of the work that we do to bring you this great content twice a week. There's the link right there, FARIA Join. And if you're interested in being a local leader, we want to speak with you about that. You can go ahead and join as a local leader, and you can lead a group in your city, in your neighborhood, in your subdivision, or wherever, whatever locale you want. We added 2 more groups this week. We're now up to 27. We added Lexington, Kentucky, and Indianapolis, Indiana. And I understand next week we're going to add 2 more. We'll be in a couple of new places in Tennessee. So that's kind of exciting. That will make us 29 groups. And we are about to go over 10,000 members in Meetup. That's pretty exciting too. And I'll let you know about that. All right, I'm going to skip over the coaching stuff. I meant to not have these, and I think we are done. Well, you can sign up for the coaching program. Don't worry about that. But let's switch back over here, and let's hear from Chip. Tell us a little bit, our sponsor today, Bay Mountain Capital. Tell us a little bit about Bay Mountain and what you've got to offer.
Hey, Roger. So, yeah, Chip Cagle of Bay Mountain Capital. So we're a hard money lender out of Dallas, Texas, but I'm in Atlanta, and I can help you over in the Southeast. In the chat, I'll list the areas in the Southeast where we're currently lending. Bay Mountain is now doing, for experienced investors, 100% financing of your purchase and rehab, up to 75% of the after repair value. And we'll also work with people that are brand new or people in between. The brand new people would need 15% down. The ones in between would need 10% down, 90% funded. We're 2 points for any of those loans for either a 6 or a 12-month loan. The 12-month loan is an additional point of payoff. The interest rate's going to be somewhere between 9.9 and 11.9%, depending on your experience and your credit score. So I'd love to talk to you about that. I'll have my contact information in the chat.
All right. Now, we are live on YouTube and Facebook. If everything's working right, I can't monitor all those and watch all the buttons and things I have to push here, but hopefully we're live on those. And so if you have a comment either on either of those platforms, just put them in the comments thing and I'll see them and I can put them up on the screen. And if you have questions, put them there as well. If you're on the Zoom call, please use the Q&A tab for your questions for Nick, and we'll get to all of them before we sign off. The other thing I want to encourage you to do is make this a true networking meeting. We can't meet in person right now in most places because of the pandemic. So please go right ahead and say hello to everyone in the chat. Chat with each other, pass notes, talk to each other. If you've got a deal that you need to sell, put it in there because there are a lot of us on this call always looking for deals. And I'll show you this, just a momentary brag. I redid the license plate wall this week, and that's over there behind me. and you also see it as we're doing the countdown timer to come on. But those license tags represent the states where I've now bought at least one investment property. We're up to 25 states. So that means I'm not shy. I'll buy a property just about anywhere. And we're buying inexpensive houses and seller financing them all over the United States. So tell us where you're from. Tell us what you got going. If you've got a deal to sell, put it in there. Let's make a deal. Let's do deals with each other. Let's join forces. Maybe you've got a little bit of money and somebody else has a little bit more money, and you can put your money together and do something. Get to know one another. And when you tell us where you're from and what you're up to, please answer this question. It's my networking question. How can I help you grow your business? Because I want to know how I can help you grow your business. And of course, I encourage you to go to my website. You can go to rogerblankenship.com and you can schedule a free strategy session with me. I'll give you 30 minutes if you can find a slot there. They fill up. My schedule stays full, but I'll give you 30 minutes and help you, no cost or obligation, just to help you with your real estate business. Also, that reminds me, and I didn't think about it till just now, the flippingamerica.net website is completely new. It went live Monday morning. We did it without a lot of fanfare because we wanted to make sure it was going to work. But please go and check out the new website, flippingamerica.net, and there's some resources that are there for you. All right. I know that you didn't come here to hear all that. You came here to hear Nick today, and Nick, I'm very excited to have you, and I'm going to see now if I can put you into the call. There you are. Nick Baldo is with us. Nick, thank you for joining, and how you doing, man?
I'm doing well. Yeah. Pleasure to be here. Pleasure to be back. Thanks for having me.
All right. Nick has been on the Flipping America show a couple of times, and you did a presentation on Asana early fall last year, sometime September, maybe, I don't know. And it was terrific. And we know that you're a teacher, you have a grasp of the technology, and you are a teacher. And so we're here to basically learn from you today. I know that you've been going back and forth with Lana a little bit, but we haven't had much chance to talk about what we're going to do here. So let me just ask you, do you have a presentation? Do you need to take the screen?
Yeah. I got my screen up. What I'm going to do is try to get as much value packed in as we can. I'm actually going to show you within QuickBooks a few techniques. So we're going to dive right into the software and get some value.
All right, go for it.
All right, great. So thanks again for having me here. And my name is Nick Baldo. I'm a real estate investor. I'm a real estate entrepreneur. And I have a company called Income Digs that I teach. I teach real estate investors and other small business owners primarily how to use software to grow and scale their business. And one of the primary pieces of software that I teach is QuickBooks Online. It's probably the most popular software. However, for those of you who have tried to use it, you probably know that it's not made specifically for real estate investors, right? So what I do is I've come up with a system and some techniques that help me in my business. I do flipping, I hold rental properties, and I teach that methodology to my students, okay? So what we're gonna do today, I'm gonna tell you about how I teach, and we're gonna take some quick wins away to show you how you can use it with your own business. Okay, so Real estate accounting is all about establishing and maintaining what I call a structured accounting architecture and workflow. So the architecture is really the setup, all right? So it's how we establish a chart of accounts, how we are establishing classes, and that workflow is really the day-to-day in how we're adding transactions, how our bookkeeper is maintaining our books, or if we're doing it ourselves, right? And this is all to achieve two things. The first is probably the most obvious, is to save time prepping for taxes, right? Taxes is one of those things we all have to do. A lot of us are probably doing it right now, and it can take hours. And believe me, the reason I came up with all those methodologies is because I've spent the hours prepping taxes and beating my head against the wall. So the first thing we're going to do is make sure that tax prep is easy. That's one thing that this software can do if used properly. The second thing, probably my favorite, is how can we use this software to get the metrics and the KPIs, that real-time data to help us grow and scale our business. So I want to help you get QuickBooks to deliver that information to you so that you know what's a profitable part of your business, what flips worked, what flips didn't, what rentals are working, what rentals aren't working. Okay. And The big thing that I want you to know, and I want all my students to know, I'm not a CPA, I'm not an accountant. You're going to have, you're going to have Roger's accountant on future show. He's going to tell you all the rules and the tax prep guidelines and all that. I'm going to help you use the software. Okay, that's my primary goal, is to use the software so that you can make those key business decisions and save time. All right. Now I have a course that's set up. Okay, and I established this course through hours and hours of really honing in on the methodology, and it's called Real Estate Accounting Bootcamp. And I take you through 6 modules from the setup to the end, where we take an empty set of books, we add properties to it, we show P&L, we do rentals, we do flips, we do all of that. All right. And the main goal of this course is to make sure that QuickBooks is used as a tool to make those key business decisions, right? And so that's what we focus on throughout the course. And what I'm going to talk about today, and I hope to deliver this value, is we're going to grab 3 quick wins from the course, okay? They're going to come right from the course. These are 3 quick wins, but they're also what I consider to be really foundational to help you use QuickBooks as a tool for your business, all right? So let's get right into those. The first is to make use of what I call 2-dimensional chart of accounts. By far, the biggest mistake I see when people sign up for QuickBooks as a real estate investor is we need to establish our chart of accounts. Chart of accounts is really just our categories that we use to put money in places in our books, right? And our tendency is to say, okay, I got 1, 2, 3, however many properties, and we immediately start adding an account per property. Okay, and it goes like that, and it goes okay, but eventually we have this balance sheet that's way too long and crazy, and we're not getting the information we need. So I'm going to tell you how we can use 2-dimensional chart of accounts. We do that by using QuickBooks classes. All right, so I'm going to bounce over to QuickBooks and show you what I mean. So our chart of accounts, again, is our list of categories. And when we establish these, again, the tendency is to say, like in this case, I have these 2 properties here, 123 Main Street and 34 Long. Okay, so our tendency is to do what I'm showing here and to add an account for each of those. Okay, so I have it for the building, and then I have closing costs, and I have CapEx. And some people even go as far as adding it for, okay, I have taxes for this property, taxes for that property, taxes for property 3. And we have this giant list, right? And it's just untenable, unsustainable. So what does this deliver to us? I'm going to show you an example of what this balance sheet would look like the wrong way, the 1-dimensional way. All right, so if I pull up this balance sheet, really simple one, I own 2 properties. That's all this is, really simple. You can see that I have 123 Main Street land, 34 Long land, 123 Main Street building, 34 Long building, and on and on and on. This is only with 2 properties. Pretty easy to envision what would happen when we have 10, 50, or 100, right? It's unsustainable. You cannot use this system this way. Okay. However, it's the biggest mistake that people make when they sign up for a new QuickBooks account, is to set things up this way. Same thing with your mortgages. Okay. And not only is this super long balance sheet and it's really hard to read and stuff, I can't get the info I need. For example, I don't know how much 123 Main Street is worth. I don't have a way to see the total of these. I'd have to do the math myself, right? And again, envision multiple properties, it's going to become impossible. So we need a different way. We need to make use of 2 dimensions. So right now I have this 1 dimension here. I'm going to add one over here. So to demonstrate that, I'm going to kind of fast forward in my fake timeline here and say in 2017, I got my act together and I started using what I call generic chart of accounts. Generic as in they don't have a property associated with them. Notice land, buildings, closing costs, CapEx. And as I'm displaying right now, I just have the total over there. Doesn't look much different. I still don't know on this report here, 123 Main versus 34 Long, do I? Well, once I turn on my display columns by classes, the whole thing takes shape. So I'm going to go up here. I'm going to go display columns by classes, run. And you can see my balance sheet is now taking shape where I still have the same exact accounts down the left, but now I have that added dimension across the top with my properties. So I'm able to see that within land, I have 32.5 to 123 Main and 25,034 Long, buildings, CapEx, and purchase costs. And then most importantly, I have a total for each property. So I know my book value of my properties. Same thing can be done with our mortgages. And then finally, we have our equity for each. Super simple example, but this is really the foundation of being able to use QuickBooks by property to manage your accounting books, okay? This is a balance sheet example. We're talking about fixed assets. As you're gonna see when we get into the P&L, it's really crucial as well for understanding our rental income, all right? So that is step one. Quick win number one is to make use of the two-dimensional chart of accounts. And actually, I'm going to bounce right back over, because you might be wondering, okay, like, how did I make that happen, right? It just didn't just magically happen. What we have to do is, within each transaction, we have to turn on either class tracking or customer tracking. And so what I do, I usually use classes. I teach both in boot camp, either use customer or class. But once turned on, every transaction gives us the opportunity to link everything to a class. And it gives us that, it's almost like a tagging system, right? I can keep a generic chart of accounts over here, and then I'm tagging with class. And once I do that, it gives me the ability to show this whole thing in 2 dimensions, all right? Super powerful. It's a huge foundational step. Your chart of accounts needs to be generic, and we need to use it 2 dimensions, okay? So that's first, that's general, that's applying to flipping, that's applying to rentals. This is really a foundational step, all right? Let's get into specific to rentals, okay? So a lot of us are out there, we hold property, right? Whether it's long-term, short-term, whatever, we're holding property, and we need to report on the operations of that rental property. So my biggest tip here, and a quick win, is to sync our day-to-day bookkeeping with our year-end tax prep. We accomplish 2 things. One, we obviously are going to save time with our tax prep. And 2, it comes down to the IRS kind of has a pretty decent setup for how they want their rental property reported. So I say, let's use that as our starting point. So let me bounce over and show you what I'm talking about. So the IRS has Form 8825. So for those of us who own a partnership or a corporation, we're used to this. If you own your property as a, just a human being, if you own, just going to be using Schedule E, it's almost identical, okay? And what they do is they list how they want you to indicate your profit and loss for your rentals. They want your rents up here, and then they want you to allocate funds to where your expenses go, right? So a lot of times we spend hours trying to map whatever we have in Excel or QuickBooks to these categories. And I say, why don't we just set up our QuickBooks to, if not exactly match, pretty close to match this, okay? And that is a huge fundamental step. Let me go back to my chart of accounts. The other thing I do, which some people have an issue with from an IRS standpoint, is I use cost of goods sold. And again, let me say that I use cost of goods sold because it helps me run my business. Whether or not you're going to use it on your taxes, that's for you and your accountant to discuss. But I'm going to show you why I like to use it for my rentals. So what I have here is my list of cost of goods sold for my rentals. And you can see that I'm pretty much mirroring exactly what's on Form 8825, okay? So I got that all down there, just like I have in here. Now, it doesn't have to be exact. One example is utilities. So the IRS is giving me 1 line for utilities. I like to split it up, electric, gas, and water, but I can make those sub-accounts under my utilities, right? The other thing I have that they don't really have is I have, I'm here in Buffalo, New York, and we have spent a ton of money on snow plowing and all that nonsense that's always with us for 6 months out of the year. So I have a specific one for that, and I need to map that over. But for the most part, it's a great starting point to say, hey, the IRS has their list. Why don't I start with that list and force yourself to see if there's a different way? So now what we can do is every single day when we're tracking expenses, they're going to go to one of these accounts, and we're going to make use of our 2-dimensional chart of accounts. Notice I don't have a separate one for every property, right? Nice and generic. So when I go to a P&L, profit and loss, income statement, okay, I'm going to grab my profit and loss for last year's rentals. I pull that up, and I think I've saved this one to actually have the classes across the top. You're able to deliver a profit and loss that has your rent and all of those costs of goods sold exactly how the IRS is going to want. And it's not like this is just something you prep for taxes. This is extremely useful in the day-to-day of your business, okay? And the reason I use cost of goods sold as well, this is my rental P&L, so it's only my rental property. I can take this total cost of goods sold, and I can potentially do a calculation to say, what's the percentage of my revenue? So I can compare percent of income, and I can see that 123 Main Street has a cost of goods sold of 33% of income. And maybe that's a metric that I'm tracking over time, right? All right, I'm at 33. Let's see if I can get that up to 40. How do you get it up to 40? You increase your rents, you lower your costs. So this is what I'm talking about, where if we can have this on a monthly basis and it's accurate, we're not just waiting for tax time to do our books. It's here, it's in real time. We can make those decisions about how are our properties performing, okay? So this is hugely useful to me. If I hand this, and this actually is how it happened. I had one of those years where my accountant waited and waited for my info. It wasn't right, it wasn't accurate. We spent hours and hours going over how the mapping would work. And I ended up spending way too much on accounting fees, right? Because it was their time. If you can deliver something like this to your accountant, I'm telling you right now, you will save money, because compared to what they get from other real estate investors, this is going to be just a magical situation, right? They're going to get this and just say, wow, I can literally map it directly over to this form. And notice that the IRS wants that two-dimensional situation as well, right? So they give you your properties across the top, in this case 4, but you can use multiple if you need them. And we just mirror that same exact thing with our P&L. Okay, so that is tip number 2. Quick win number 2 is don't reinvent the wheel when it comes to your chart of accounts. Start with what you're going to need to do anyway. So for your rental properties, you're going to need to map to these categories. Why not do it from day one and save a ton of time on the back end working with your account? All right. Okay, so that's rentals. We're going to do one for flipping as well. Okay, so I got a quick win for rehabs and flipping. So my biggest thing here, and I'm kind of a geek when it comes to the rehab tracking. So you're going to see a lot of cool stuff here. You don't need to do it all, but a quick win, what I'm talking about here is to track your actuals in parallel with your pre-purchase analysis. So we are so good at analyzing properties before we buy them. We all have calculators. We're using calculators to understand before I buy, is this thing going to make money? How much am I spending in these different areas? What am I going to sell it for? What's my ARV? And then, bam, I'm going to make profit, right? Well, it's also important to see how we actually perform, right? And so I want to set up QuickBooks in a way that mirrors exactly what I'm doing on the analysis side. So I'm going to show you a few techniques to do that. So when I'm talking about an analysis, I'm just going to pull up kind of a sample one here. We all have some kind of tool we're using to analyze our properties. They all look a little bit different, but ultimately what they're giving us is we're going to sell the property at the end for a certain amount. We bought it for a certain amount. We had some buying costs, some rehab costs, holding costs, some selling costs, and a profit, right? Some mix of that. So I want, when I'm managing my rental, or I'm sorry, my flip in QuickBooks, I want to have something similar so I can see how the heck I'm doing, right? I want to know, okay, I analyzed it and I think I'm going to make this. What am I actually making? That will, one, tell me, do I need cash? How am I performing? But 2, it's going to help me get better at those analyses in the future, okay? So there's a few techniques that we can use for this. The first is when we talk about the rehab, we're generally calculating a rehab or estimating a rehab with a bunch of categories, right? So here's an example of one where we have, we're using some kind of tool to say we're spending a certain amount in all these different areas, right? Everybody's a little bit different, but we're generally doing a rehab estimate with some kind of categories. There's actually a way within QuickBooks to use those categories as well. And that's something called products and services. So I'm going to show you that briefly. If I go to my products and services, I really encourage you to turn this on. It adds an extra level of detail that gives us a huge benefit when we're analyzing how we did in our rehab. You pretty much enter those categories that you're using to do your analysis. You enter them as products and services here. You can see I'm actually categorizing them like into sections. And then within these, the secret here is to tell QuickBooks, products and services is kind of a weird term. It's just what they call them. It's almost like they think you're going to sell them. You're not going to sell these items. You're going to purchase them. So if you click edit, and for each one of these, you say, I purchased this product or service. And when I do, I want the expense account to go over to a specific, that one's a little bit different, to a specific rehab cost. So if I go here, Let me find one more. This one up here. Okay, so I'm telling the system, when I use this product or service, I want you to map it to my flips rehab cost, okay? And if you establish that up front, you can actually tag your various transactions to these categories, and QuickBooks will help do the math, okay? So that's kind of one setup piece. The other is to make use of the projects within QuickBooks. So if we use projects and we've established our chart of accounts, we just go back over to our chart of accounts. We have a chart of accounts for our rentals, and I have a few more for flips. I don't have many. I'm, again, mirroring my analysis. I want to be able to compare the two. So for flips, I've got my purchase price, my buying cost, my rehab cost, my holding cost, my selling costs. Nice and simple, right? So those are I want to populate expenses into those. And I want to use this projects portal. This projects portal is hugely beneficial. So this gives me a really cool P&L style look. So if I have this sample here, 65 Central Park. If I click into this, it gives me a P&L, but in a really neat looking setup, okay? And I'm gonna focus right here on this cost of goods sold. So I've got my rehab costs, my purchase price, my buying costs, holding costs, selling costs, all wrapped into this thing, okay? And so I can track this as I move through the project. Now, one thing that I get asked a lot is when we're flipping, often our books look really nasty until we sell it, right? Because we're spending money. Now, you could treat your flip as an inventory asset and say, like, the money I spend goes to my assets, and that's fine. You can do that. However, I like to use this type of portal because it shows me something that looks a lot like my analysis, right? And so over time, it's showing, as I'm spending money on the rehab, it's showing negative net income. And I might want to know, okay, well, I know it's negative now. I'm eventually going to sell this thing. So what I teach my students is to actually make what I kind of call a phantom transaction to say what that ARV is going to be. And that's something like this over here. So I can show an income. Now, this is not reality at this point. It's just my current estimate of what I'm going to sell it as. And another key point, I can't stress this enough, this is not something like you would go to your accountant and say, hey, look, here are my books, here's my phantom transaction. These are all things that we would clean up and make sure are gone by tax time, which I teach in the course as well. This is about operating your business. So I teach my students to make a transaction like this as we get into our flips to indicate what our target ARV is. Bring in some selling costs as well, right? So if I sell for this much, I'm gonna probably spend 6% on my realtor commissions, maybe some closing costs as well. And then I offset it with an equity or a liability account just to kind of make the math work, right? And what that gives me is at any point in time, I can come to my project details and see how am I doing my income minus my cost, my profit, and my net profit margin. And you can manage in the All Projects tab. If I had a bunch more samples up, these are kind of blank. You can see a bunch of them at once and you can track your profit margin, okay? Hugely beneficial. Now, when we're finished with this flip, you can do all sorts of things to getting the flip to show up on your balance sheet or to show the income differently. Again, I'm just showing you operational. Now, I'm going to take one more step further to show you that work we did on the products and services to get all that detail, how that's super valuable. You see right here, I just have the rehab cost. And this is great. Okay, $84,000 in rehab costs. But weren't we trying to get more detail, right? The answer is yes. I'm going to drill down into this by clicking. So now I have that huge list of all the rehab costs here. Nice big list. Okay, great. I can take this list, and if I pick on one of these, you'll notice that I didn't use the category section for the expenses. I actually used that products and services down here, okay? And QuickBooks mapped it correctly to my rehab costs. And now what I can do is I can take this entire report and I can group by products and services, run the report. And now, let me just hit these arrows to get it up. QuickBooks is showing me that 84,000 split up into my categories, right? So I can take my rough structure and split that open and see like, okay, how much did I spend in all these different categories? And then I can compare it to my analysis, right? So it's that extra level of detail that a lot of folks don't know exists within QuickBooks that we can use. I'm not losing anything by doing this. I still have the the upper level, parent level, that they're all rehab costs, but I have this detail if I want it. And one thing I do with all this detail is, and this is where I say I'm kind of a geek, I actually export it to an Excel, or in this case, a Google Sheet. I do all sorts of cool stuff. And what I'm doing with the export is I'm really comparing. I have my estimate and then I have my actual. So I dump all the data into like a sheet like this, and then I draw up these cool reports where I can say like, okay, here's my spending by category. Here's my spending over time, expenses versus labor. Here's my burn down, right? So if you establish a budget for the rehab, here's how you're consuming that budget. And these are really good for you as an operator or as somebody who's managing the finances of your rehabs. It's also great for investors, okay? I've gotten really good feedback from investors or lenders to see performance of a project. This is really helpful stuff. Now, this is, again, you don't need to go this far with the external report, but I love to be able to kind of bring in and be able to customize it beyond what we can do in QuickBooks. So ultimately, the lesson here is to establish a methodology within QuickBooks so that this analysis doesn't just go away once we start the project. You don't want to just analyze it, estimate it, and then forget about it, right? You want to know how you did. And the only way to really do that is to set up some kind of system within QuickBooks that mirrors what you're doing in your analysis. All right. So that's quick win number 3. A lot in there, and I appreciate your patience with it. I love the rehab stuff because I love all the numbers in tracking everything by category. I love that stuff. It takes some time to set up, but it's really valuable in the end. All right. So what's next? So I would definitely encourage you to, if you have QuickBooks already, to try to implement those quick wins. They take time, there's no question about it, to kind of readjust your books, but I really think you're going to get a lot more out of the software if you do that. Also, if you're interested, we'd love to have you in Real Estate Accounting Bootcamp, which is the course, okay, that I mentioned. We would absolutely love to have you. The way that we set it up, and we can get into it a little bit more detail if need be, but we have those 6 modules. Those really are like the core content of the course where I take you through those videos. You do them at your own pace. We also have supplemental community to ask questions, and actually we have live Q&As every week as well. We have one tonight where we're going to talk through all those nuances. Everybody's in tax time now, so we got all these cool questions coming through, so we're going to answer those. So we'd love to have you in Real Estate Accounting Bootcamp for sure. If you choose to sign up, we do have a special coupon code because Roger's been so awesome to me and to us. So Flip USA, enter it at checkout, $100 off. It would be excellent to have you with us. Again, what you get with that course, these 6 modules, and this is just the beginning. I will say that most of the students who take the course, they work through these modules, and it's great. They establish that foundation and really get off to a good start with their accounting. But I'm right there with you. So I'm answering questions, whether they're specific to the lessons or they're kind of separate, nuanced questions about your business. I'm answering those all the time as well. So again, we would love to have you, incomebigs.com/read. And with that, I'm open to any questions that might have come up.
All right. Well, let's see now. See if I can figure out how to get back to where I am on the screen with you.
Okay.
All right. Let's see. Yeah, I don't even know. Close you out there. Oh. Yeah, tell him to come back. I was trying to figure out what to tell Nick to come back. All right. So I found the button, but all that did was kick you off. All right. That's right. So Candace asked, she's using something called Stessa to track her investments. Have you heard of it?
I haven't actually. Man,
okay.
I haven't. I apologize.
All right. Now I don't feel so bad because I hadn't heard of it either. Good one, Candace. You stumped the Flipping America guy and the teacher. So we'll both be, it's Stessa, and we will both be checking it out as soon as we get off this call, I am sure. If you have other questions for Nick, she says in the comments in the chat, it's for investors and free. Great. And Bobby Sharma, that leads the San Francisco RIA, has a pretty good thing for tracking your assets, the properties that you own, and so forth. And it's pretty neat too. He's not ready for publication yet, so I probably shouldn't have even said anything. But eventually, he's going to have it out there. Anyway, if you have questions for Nick, put them in the Q&A. Do you have questions for him about? I think he's willing to go specific with you,
Yep.
and deal with your situation. And I appreciate. I had a debate with a CPA, a former CPA, one time about how to book a flip property, because the way she wanted to book it as the standard way of booking real estate in QuickBooks was not allowing me to see the breakdown in expenses.
Yep. Yeah. Yeah. And that's so common, as we get hung up on. I mean, the CPA is going to do what they need to do for taxes, right? That doesn't mean that we need to not use the software in a way to help us with our business. We can always transfer things and move them. So that whole P&L I was showing for the rehab, that's what I'm using throughout the year, right? If we get to the 31st of December and my CPA says I need the flips to look like this, okay, we can do a journal entry to move them. We just can't let ourselves get hung up on all these rules and stuff when all we're trying to do is use the software to manage our business. We can always make things look right for taxes without impacting the way we're operating.
Okay. Anybody else have any questions? All right, let's, Lana, would you put that link in there one more time? Let's see, Leda, how many properties do you need to have to use QuickBooks? For a beginner, is it simple to use just an Excel spreadsheet? Is it simpler just to use an Excel spreadsheet?
Yeah. So I would suggest that once you kind of get past 2 or 3, it's probably time to start looking at QuickBooks. I find, I started to use it pretty much right away. The Excel stuff is fine, but what you're not able to do is to have that automatic adherence to your debits meeting your credits, right? So QuickBooks enforces that. So, I would suggest, if you can afford it, start right away. But once you get to 2 or 3 properties, it's probably time to start getting into QuickBooks. And I promise you, if you're using it right, you're going to be happy you did.
Now, I'm a little surprised that no one has asked this yet. And the question you probably should ask is, Roger, what do you do? Is anybody asking that question? All right. Well, I will tell you guys, I have multiple companies and different income streams and so forth going on. And I have a wonderful accountant who has lots of QuickBooks bookkeepers working for him. And when the bookkeeper comes to work for him, they take the book. There's an exam that you could take to see your QuickBooks competency, and he will only take people. He will only consider them if they make a 95 or better on that. So they really have to know QuickBooks really well. And so I maintain records, and I turn it all over to them and their bookkeeping. And for a while, we were doing some QuickBooks in-house, and then they were, getting online and connecting with us. But for now, for the last couple of years, it's just give him the records, and they construct the books. I just pay them to do it.
Yeah, and I think that is a great place to want to get to, and like in the interim, if we either you don't have the business to do that yet, maybe we can't afford it, and so we're taking it on ourselves, or we're hiring a bookkeeper who doesn't, we're not as confident as Roger is, right? We're hiring a bookkeeper. A lot of bookkeepers are great at QuickBooks, but might not know real estate, right? So, understanding the nuances. This is probably one of the more complicated businesses to run in QuickBooks. And again, QuickBooks, it's an amazing product, but they didn't create it for real estate investors. So there's not really much intuitive, knowledge out there for how to do it. So if you need to, in the meantime, kind of track your own books or hire a bookkeeper to do it, it's really important that you don't just like sign up and say, go for it. Make sure you have a system that really works for real estate, because this business we're in is a little bit different.
I think it's probably been at least 10 years ago now. I was sitting in Will's office my accountant, and I said, "Hey, man, with the QuickBooks is really kind of taking over, is it cutting into your business or hurting your cash flow?" He said, "Shoot, no, it's helping because we make a lot more money spending time fixing all the things that do-it-yourselfers are screwing up with their books."
Yeah. Yep. It's great. And like I said, I'm kind of the guy I usually teach something that I've had a problem with, right? In QuickBooks, I'm telling you, I spent a couple of those tax years beating my head against the wall. And I knew there had to be a better way. And so I spent hours saying, like, how can I set up a system that works? I got it to work for me in my business, and I started teaching it. It's just such a relief. We still take time to prep taxes, right? But it's organized. It takes a few hours, not a few weeks. So that's what we're after.
All right. Nobody's popping any questions into the Q&A. There may be some in the chat that I missed, but in the Q&A, I'll see them. In the chat, I might or I might not. All right, everybody. Our time is about up. So let's thank Nick. You know what to do. Put a bunch of sevens in the chat. And that's the Zoom way of applauding. Thank you, sir. Appreciate you being here with us and giving your time today. And we will follow up with the sign up, because if you're not set up with your bookkeeping, you need to take this course with Nick. You just need to and get started right. And we're even getting some sevens into the Q&A. So we appreciate you, man. And thanks for taking your time to join us today. And thank all of you for taking your time to be on the call. We'll be back in tomorrow night with more talk about money with Will Tomasello. We'll see you.
Thanks, Roger. Thanks, Nick.
All right. The Zoom call is over. You and I are still here.
Great. Hey.
Yeah. And we're still actually live streaming until I hit end. But thanks, man. Appreciate it. Yeah. And hope we'll get some signups from it.
Absolutely. Thanks again for having me anytime. Happy, whatever software. I'll check out this stress and we'll see if we can do a demo on that too. So.
Yeah. Okay. All right. We'll see you.
Okay. Thanks.